Welcome back to Empowered. I'm Elizabeth Namofsky. On today's episode, we're discussing smart mortgage strategies and wealth building for women. So, Kinga, before we went to break, I asked you, how can I own a home without feeling financially trapped by mortgage debt? And I had to cut you off to go to commercial break. So, please continue.
Yeah, absolutely. So the first thing was avoid maxing out your pre approval amount. The second one is try to make a larger down payment if that's accessible to you. The third thing is choose the right mortgage strategy. Some are more flexible than others. You may have a line of credit attached to your mortgage. The fourth one is to have an emergency fund. That's really important in case something happens. The roof might crack or a tree might fall on your shed. And the last one is to do a mortgage review, an annual mortgage review with your mortgage expert, because your situation may change and the market out there may change.
I hear everybody wants mortgage rates to be lower. I need them lower. Is a lower mortgage rate always the best option?
Yeah, I love this question. You know what? It's absolutely not necessarily the best option. And the reason is because there's two reasons. First, we try to look at the global cost of the mortgage. What will it cost over the term and over the life of your mortgage? And the lowest cost mortgages tend to cost more, as well as tend to be less flexible. And you want that flexibility to pay down your mortgage faster. So that is a common misconception that we can easily sort of discuss by comparing the lowest term to a mortgage strategy that benefits you.
Interesting. So, what's the biggest financial mistake women make when they are buying their home?
Yeah, not looking at the total cost of home ownership. So, again, there's life expenses, insurance, taxes, groceries, all of that. We need to look at the whole cost of living in addition to home ownership. Too much focus on how do I get approved, not enough focus on the mortgage strategy. And what I'm seeing quite a bit with renewals is leaving it too late. And then that time pressure of, oh, I have to renew in 2 weeks doesn't allow for you to explore your options. So I start the renewal process, start early, like call 6 months prior to your renewal so you really have the time you need to take a look at what your options are.
So I want to talk about options as well. Like these are great words of wisdom for people who've never purchased a property before and really need to know the background to it. But you see on the news when interest rates went up, people said they couldn't afford their mortgages. People were saying that they couldn't afford their homes because the mortgage had gone up so much, the mortgage payment. What can people do to protect themselves in that situation going forward?
Yeah, well, the first thing is talk to when you're coming into any kind of difficulty or concern with your mortgages is call your mortgage agent because you do have your changing financial picture in those moments and there may be options that you're not aware of that they have. One example is you may be able to extend your amortization to lower payments. You may be able to skip payments. You may be able to get a little break if you talk to your lender or mortgage agents on those payments. The other thing in times of, say, high interest rate debt that a lot of people are carrying is there are ways to wrap it into your mortgage where you're actually going to end up paying less on interest rate. So you have a little bit more cash flow, and that really helps alleviate that cash crunch that people are feeling during the month when you have more month than you have money.
Mhm. So, when I purchased my home, my goal was to pay off my mortgage as quickly as possible. How can someone use their mortgage to create long term wealth instead of just paying it off?
Absolutely. So your mortgage decreases and typically your home value appreciates. And while it appreciates not quite evenly, it does appreciate. So you want to take a look at how much equity you have. And equity is the difference between the mortgage that you have, that's your mortgage debt, and the value of your home. So you're going to have increasing equity as time goes on. Now, you can use that a variety of ways. One of the ways that I see it being used often is taking the equity out and using that equity to purchase another investment property. What happens there is you've got your own property. It's an asset that's
Mhm.
appreciating, and you've just used the equity from that asset to purchase a second asset. Now you have two assets appreciating simultaneously, like two seeds that are growing simultaneously for you.
Okay, we will continue with this talk a little bit more when we come back. Don't go away.